Pi Network News. Rug pull accusations as $18 billion vanishes. This video is structured like a crypto documentary, news deep dive. In a bull market where Bitcoin has soared past $123,600, Ethereum stands strong above $4,500, and XRP is touching $2.96. One cryptocurrency is heading the opposite direction. The Pi Network, once hailed as the people's coin, has seen its value collapse from $2.98 to just 26 cents. Wiping out over $18 billion in 6 short months. Now, accusations of a rug pull are resurfacing, and millions of early adopters are demanding answers. Welcome to Crypto 7, where we break down the truth behind the most talked about crypto stories. If you are feeling generous, then hit the subscribe, like, and notification button. Today, we're diving deep into the Pi Network collapse, the community's outrage, and the burning question: is Pi still worth believing in? What is Pi Network? To understand the current storm, we have to go back to where it all started. Launched in 2019 by a team of Stanford graduates, Pi Network promised to make crypto mining accessible to anyone, straight from their smartphone. No expensive rigs, no complicated setups. Just tap the app once a day, and you're mining. That simplicity drew in millions. By 2021, Pi claimed over 35 million users, making it one of the most downloaded crypto apps in history. The idea was revolutionary. A decentralized currency built by the people, for the people. But there was one catch. The coin wasn't live. It was in a so-called enclosed mainnet, meaning Pi couldn't be traded on any major exchange. Still, the community held on. For years, they mined, shared, and built stores that accepted Pi, all in anticipation of the day when Pi would finally go public. That day came in early 2025, and the results shocked everyone. The crash. $18 billion vanishes. In February, Pi's token finally appeared on multiple unofficial exchanges. The excitement was electric. The price surged to $2.98, giving Pi a paper valuation of over $20 billion. But then, it started to unravel. Within 6 months, Pi fell to just 26 cents, a staggering 91% loss in value. That's $18 billion erased. Gone. For many in the Pi community, it was a devastating blow. Years of mining, some since 2019, suddenly felt meaningless. Crypto commentator Mr. Spock didn't mince words, calling the collapse basically a rug pull. Others accused the developers of manipulating supply, delaying withdrawals, and withholding information about the real circulating amount. And as prices fell, so did trust. Community outrage and confusion. Inside the Pi community, frustration has reached boiling point. Many users still can't move their tokens to exchanges. Others claim that Pi's kick system, the process to verify users, is flawed and inconsistent. Some Pi pioneers report being locked out of migration entirely. One longtime miner said, "I've tapped every day for 5 years and still can't sell one coin."
And then there's the infamous $314,159 fixed price belief, an inside joke turned cult conviction. A segment of the community still insists Pi's true value will someday be $314,159 per coin, a number inspired by the mathematical constant Pi 3.14159. Experts, however, say that's a fantasy. With a circulating supply possibly in the billions, such valuation would make Pi worth more than the global economy. So, why do so many still believe? The transparency problem. Transparency, or the lack of it, sits at the heart of Pi's crisis. The Pi Core team has repeatedly changed its token migration rules, limiting how much users can move or sell at once. Supporters say it's to prevent price manipulation and build long-term value. Critics say it's control disguised as caution. Then there's the Pi Foundation, the entity that supposedly governs Pi's ecosystem. No clear data exists on how much Pi the Foundation holds, whether any tokens were sold privately, or how funds from partnerships are used. Even the project's KYC numbers are under fire. Pi claims that 14 million users have been verified, but some blockchain analysts say that number could be inflated with thousands of dormant or duplicate accounts. And while Pi says it's focused on utility, enabling users to spend Pi in apps, games, and stores, many of those dApps are still running in test mode. The result: a growing credibility gap, the exchange listing struggle. For a project that calls itself the People's Coin, Pi remains missing from one key place: major exchanges. The few listings that do exist are unofficial IOS, not real mainnet tokens. Exchanges like Binance and Coinbase have stayed silent, likely wary of P's unclear tokenomics and internal structure. Institutional investors, too, have kept their distance. As one analyst put it, greater than without transparent supply data and an open mainnet, Pi uninvestable. Meanwhile, P's competitors, from WorldCoin to Core DAO, have already secured listings, partnerships, and developer ecosystems. The clock is ticking, and P's isolation is becoming harder to defend. So, is Pi Network a rug pull? Let's look at the evidence. Price collapse? Check. Unclear supply and migration rules? Check. No exchange listings? Check. Developer silence and shifting timelines? Check. While there's no concrete proof that the Pi team has run off with funds, the project's actions, or lack thereof, have created an environment of mistrust. Rug pulls aren't always instant. Sometimes they happen slowly through delays, restrictions, and false hope. That's what some in the community believe is happening now. Still, die-hard supporters insist Pi is just in a long development phase. They point to ongoing updates, active social media accounts, and growing merchant acceptance in some regions. Maybe they're right. Maybe Pi just needs more time. But after years of waiting, patience is wearing thin. What's next for Pi Network? Despite the controversy, Pi Network isn't dead. At least, not yet. The team continues to promise progress on open mainnet, real exchange listings, and developer integration. If Pi can deliver those things, it could still stage a comeback, especially with a massive user base and brand recognition across the world. But that window is closing. The crypto market is roaring again. New narratives, from AI tokens to real-world asset tokenization, are stealing the spotlight. If Pi can't capitalize soon, it risks being remembered as just another lost opportunity. At its core, Pi Network represents a powerful idea that anyone, anywhere, can help build the future of money. But ideas alone aren't enough. Transparency, execution, and trust, those are what turn potential into power. For now, Pi stands at a crossroads. Will it rise from the ashes and fulfill its promise, or go down as one of crypto's biggest disappointments? Only time will tell. Now let's not forget that Pi Network had the biggest airdrop in crypto history. Thanks for watching ViCrypto 7. If you found this deep dive helpful, make sure to like, subscribe, and hit the notification bell because this story is far from over. Stay tuned, stay smart, and as always, keep your crypto close and your research closer. Disclaimer, please note that cryptocurrency prices can be highly volatile, and this information is intended for educational purposes only. It should not be considered financial or investment advice. Always conduct your own research before making investment decisions. The content and materials featured on this page are for educational purposes only. ViCrypto is committed to providing unbiased and transparent reporting. This video aims to deliver accurate and timely information but should not be taken as financial or investment advice. Since market conditions can change rapidly, we encourage you to verify information on your own and consult with a professional before making any decisions based on this content. The information provided in this video is for informational purposes only. It is not intended to be, nor should it be construed as, financial advice. We do not make any warranties regarding the completeness, reliability, or accuracy of this information. All investments involve risk, and past performance does not guarantee future results. We recommend consulting a financial advisor before making any investment decisions.